Dana, how should I be reading this data? It doesn't look too good.
Well, that's exactly how you should be reading it. Consumers are definitely feeling the pinch from higher prices for food, for energy, for housing, for just about everything. And that's certainly affecting their sentiment. Also, consumers are starting to see in the news that there are some layoffs happening. Even though the job market still remains pretty strong, we are going to see fewer payrolls going forward, probably some uptick in the unemployment rate. And consumers can kind of feel that in the wind.
And Dana, when you release the Conference Board Consumer Confidence Report, there are different aspects of it. There's the expectations, there's the present situation. What kind of story do these different measurements tell us about the U.S. consumer? Is there nuance in here?
Sure, there is. The present situation tells us how consumers are feeling right now, and we definitely saw a dip back to some levels we saw earlier this year. Consumers are not feeling that great. They're starting to pull back on spending, especially spending on goods, and that's starting to show up in the data. Also, the expectations number tells us what they think for the next 6 months, and that measure is telling us, it's still telling us that consumers think that a recession is around the corner for them.
When, Dana, what is this data telling us about the specificity of that recession? Are we already there? When is it going to come? Can you be a little bit more detailed in terms of what this data are telling us about exactly the timing around that recession?
Sure, the expectations gauge has been below 80, and anything below 80 signals recession. And it's been below 80 for several months now. And so our own forecast suggests that the recession is actually starting right now in the fourth quarter, and that's going to extend into into the first half of next year. And all of our indicators, our leading indicators, are saying that recession is now. Also, that the probability of recession at any point over the next 12 months is very high at 96%. So we think it could be starting now. Certainly that's fungible, but we are headed for a recession, certainly as the Fed is raising rates very quickly, very aggressively.
This is really the most long-awaited recession I can think of. We've been hearing about it since the beginning of the second quarter. And if you're right, Dana, it's happening right now in the fourth quarter. We've already seen companies and consumers brace themselves for this slowdown. What does further belt tightening look like?
Sure, it means reduced spending, certainly on services. When we look at the data, vacations are still, people are still looking to go on vacation. But still, now when we look at the spending data out of the BEA on services, it's starting to come off a little bit, certainly as people are seeing prices rise for services. And also they're getting a little nervous about whether or not they're going to continue to see big increases in wages, and also if there are going to be any layoffs.
Dana, how does it break down socioeconomically? How does it break down with age? What are the demographics telling us about where the pain is being felt right now and where it's going?
Sure. It's interesting. The people who are the most morose about the outlook are older Americans and also the younger ones. And I think that's because the younger ones have never experienced inflation. This is new to them. And the older ones remember inflation. They know how bad it can be. And so certainly that's where we're seeing in terms of confidence. But certainly when you look at folks who are very vulnerable at the lower end of the income spectrum, they're seeing higher prices for food, for gasoline, and also for rents, which are a huge portion of what we see in terms of inflationary pressures in key inflation gauges. So certainly for folks at the lower end of the income spectrum, it's much more difficult for them.
You know, Dana, our question of the day is, where's the next squeeze? Where are we going to see demand destruction fall next? I think ahead to the end of the year and the crucial holiday season for so many companies. How do you expect the holiday shopping season to shape up? Are we going to get a good read in the weeks leading up to it, or is it going to be a surprise after the fact?
Well, the Conference Board does do our own special survey on holiday shopping, so that's pending. But at least looking at the data that we have, it looks like consumers are looking to pull back a bit. Certainly if they're afraid that there is a recession, which again, they've been signaling for several months now.
Dana, if gas prices come down, how big an impact could that have? I'm just trying to wonder what's going to stabilize the situation.
Sure. Our own inflation expectations gauge for 1 year out really reflects what's going on in gasoline prices and also food prices. So if gasoline prices come off, then people will feel a little bit wealthier, a little less concerned about the outlook. But still, if food prices continue to rise, especially as we head into the holidays where people love to buy food and have those family gatherings, then we expect that we're probably going to see downward pressure on consumer confidence.